All right, from chaos to control. Most business owners don't need another hire. They need someone who can step in, clean up the financial chaos, and build systems that actually scale. My guest today, Scott Dantuma, has done exactly that for dozens and dozens of businesses. And today he breaks down how smart strategy transforms the entire operation. Scott, welcome to the GO4CEO channel. How are you?
I'm fine, thank you. How are you?
Awesome, awesome. Well, hey, look, super excited to have you on. We've known each other now a year and a half or two, a couple years, and just seeing the way that you move in the marketplace, the deals that you put out there, and the people that you're helping as far as businesses is, it's always enlightening. So, super excited to kind of share the story. We usually like to start with, hey, how did you think of your profit, and your business, right, and everything that you guys are doing, your profit authority, sorry. How did you start that? What was the background? All that type of stuff, if you don't mind sharing that first.
Absolutely. I think it started when I came out of the Marine Corps and I was like 21 and I went to work for a company that I saw problems with and very quickly went to the owner and I said, I think you have some serious problems here that are affecting you financially that can be fixed. And I was very quickly, shortly after that, moved into the position of general manager for the company. And then from there, they were in deep financial trouble. So the more I learned, the more I realized they were in deeper than I even thought. And I eventually made an offer to the owner, who was the majority shareholder, went on a call with all of the shareholders and told them what I wanted to do and that my intention was to clean up the company and purchase the assets for the value of the assets, which meant I would assume the debt of the company because the secured debt exceeded the value of the assets of the company. So I did that. It's called a leverage buyout. And I was still kind of patting myself on the back for pulling that off since I didn't have any education in finance. When I suddenly realized I had a daunting problem ahead of me, and that was, what am I going to do with all this debt? So I was actually downtown on Secretary's Day, as they used to call it, with my secretary, and and she went across the street to get cigarettes, and I said, I'm going to be in Crocs and Brentano's bookstore. And she came in and found me back in the business section, and I bought a book called Turnaround, written by Dr. Goldstein. And as a matter of fact, I'm not leaving on you. As a matter of fact, this is the book I bought, and you can tell it's a little bit weather beaten. And it was later autographed by Dr. Goldstein to me. Um, and eventually, Arnold Goldstein, and I became partners. And because he was a professor emeritus at Northeastern University and ran and owned one of the largest bankruptcy law firms in Boston at the time, Myers, Goldstein, and Cosberg. And I said, tell you what I'm going to do. I need you to come to Chicago so that you can look at this, because I read your book. I got to him through the publisher. I read your book, and I think I should do this, this, and this. He said, you're spot on. Go ahead and do it. I went, oh, no, I'm not doing my own lobotomy. I don't think so. And I said, I'll pay you to come here. So I flew him to Chicago. Um, and he looked at it. He said, no, your strategy was correct. Let's just implement it. I said, so we did. And then shortly after, he said, you seem to have a marked propensity for this. Why don't you just join me and do this? I went, I have the business now, so fast forward 2 years later, I sold the business and I went back to him. I said, is that offer still open? He said, absolutely. So I gave him a third of everything. I took 2/3. He would come up with the strategy because he was a master at that. And ways to avoid bankruptcy. In spite of being the largest bankruptcy law firm in Boston, he was opposed to bankruptcy if alternatives were available.
Mm.
So, we went into business together, and he became the attorney for the business and the master strategist. And we worked together like that for a number of years until one day he said, you're graduating. So I think you can do this on your own. You really don't need me anymore for this. He was always available to me, but we didn't need the split anymore. So I went off on my own, and fast forward, we've done over 2,500 turnarounds, and I've owned somewhere around 75 businesses of my own that were all in trouble. That said, I don't care if you can perform miracles, just protect my assets and in my personal aspect. And I don't care what you do with the business. And I say, oh, I'll take it. And then I clean it up using the exact same plan I'd laid out for them. I clean it up myself and flip it the way some people flip loans, flip houses. So that's what got me started, and that kind of fast forward to 2,500 plus turnarounds since then.
Well, you definitely appropriately named the company Your Profit Authority, right? Very direct, very understanding of what the mission is. Wow, I mean, I would say it's such an incredible story in the sense that you read a book, you were proactively looking for that author that hit you and built that seed of greatness in you and discovered your own possibilities and things that you were going to do in your future. But I love the notion there, Go4CEO community, that Scott was proactive about seeking the author, seeking the guy with the knowledge, seeking mentorship, and then eventually became a partner in business with that same gentleman. So what a really cool story, and I guess one of the questions that comes to mind is, seems like you were pretty young, you were given some authority in that first company. What gave you some of that confidence? You said it yourself, you weren't like a scholar of finance, and you didn't get, your multi-double MBA and super duperness, right? So what was some of the confidence that you got? Was there a childhood that, your dad and mom kind of built into you? Did you already have some inklings that you were entrepreneurial? What was some of those attributes?
Well, I came from an entrepreneurial family. And so I'm sure some of that was, innate in my persona. But I think the one thing I found out, I don't want to go too far back, but when I was leaving eighth grade, my math teacher, Mrs. Savage, I still remember her name, said to my mother on our exit, she said, he'll do fine in high school, just keep him away from math. And my mother, being the nature of what she was, took that as a gauntlet down and informed me that she had enrolled me in a pre-algebra class. Ready for this? In summer school. Right in between. Are you serious? I have to go to summer school? Yeah. So I went to summer school and I got an amazing teacher, and he just turned on a gift that I apparently was born with. It was innate, but he turned it on. And I said, geez, I love numbers, and I can do this stuff in my head. And I stuck with math, in a very strong way, and just excelled at it. And then when Arnie came along and into my life and became my mentor, he would say, I don't even know how you're doing these things. You don't know this stuff. I said, well, thanks for the vote of confidence. But I guess between him being impressed with what I was able to do and my comfort with numbers, that gave me the confidence to start down that trail, and having him in my back pocket for when I said, okay, I'm lost. What do I need to do and why do I need to do it? And he told me and he worked me through that. And like I said, that went on for several years until he finally said, no, you got it. You're independent.
Okay, so it takes me to the building of your business, right? Obviously, you were internally already had successfully kind of taken over a company based on that leverage buyout and understanding that scenario. You bring on this mentor, you create a partnership after a couple years going back to him and having turned around that specific company. But you knew that you needed that kind of mentor, that ally in business. You set up an agreement. So how are you going to market? Like now you're freed of that other company, you sell it, you start this partnership. What were some of the ways that you started to market yourself as this profit authority and understanding what you just did with that last company?
I actually, that's a great question. I actually didn't market myself. I marketed Dr. Arnold S. Goldstein from a major law firm, professor emeritus from Northeastern University in business law, et cetera, et cetera. He had accolades as long as your arm. And he had turnarounds under his belt that I would only hope to have. And so I marketed him, and I would say to people, I market in Chicago, and I'd say, I have this gentleman, look him up on the internet, Dr. Arnold S. Goldstein. You'll see his books. He's prolific in writing on the topic of turnarounds. And I'm going to have him come to Chicago for a client. And I might be able, I knew my clients, these people are in trouble. I knew they wouldn't be able to afford his typical $10,000 a day fee. So I said, I might be able to carve out an hour for $1,000. Are you interested? And of course, to talk to the master, because he had, like, you could look him up, he was everywhere, extremely well known. And so I garner up to 10 prospects that were in trouble based on that at $1,000 a piece, fly them into Chicago every other week, and we run it like a mash unit. And I had my office and my conference room and everything, and he'd come in and he'd roll up his sleeves, with the French cuffs, and he didn't have to play the role. He was the role. But he'd go through and he'd say, we're going to have to do this, we're going to have to do that, and here's the plan, and he'd strategize it. And then I had two paralegals working for me by that point, and they'd go out and they put all the paperwork together, and man, it was zip bam boom, and in 1 hour we'd turn somebody around and we'd have the strategy. He'd leave and I'd execute the plans over the next 2 weeks and get everybody started and moving in the right direction.
Wow. 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 What amazing kind of process that you started to develop there. And, and you would think, and I'm in the commercial banking world and from my day to day. And, that hour must have been very intense, right? But it's also illuminating per se, right? Because you think about a guy that has done it over and over and over and over, can look at certain line items on a balance sheet or an income statement and say to themselves, okay, I see the problems. I see those opportunities, right? And that's priceless. So yeah, that $1,000 for that hour was total gold. Really, really interesting and genius by you too. Go4CEO community. You heard Scott say there that he took the leverage, quote unquote, right, of the expertise of this gentleman that already had the credentials and some of the stuff that the environment and the market would adhere to or look for where Scott didn't have that, but Scott had the ingenuity of marketing that so that the business would come from there and then you would grow that opportunity, right? So really, really cool stuff. Now I know that there's a list of things that you've been able to kind of put together and share, or that you want to share here. When you think about those paralegals and some of the other aspects that you did, can you break down a day, like even just a quick background of how that hour would look like? Because I'm very interested in seeing if we could pick out any nuggets, if you recall how those hours look like for you and Doctor.
Well, I think I think you kind of hit on it because one of my claims to fame is that I can look at a balance sheet, assuming that it's properly assembled. Many of them are not.
Yeah.
I can look at a balance sheet and within 15 minutes, I can tell you exactly what's wrong with the company and what you need to do to turn it around, after 40 plus years of doing this. So I think, wait, I lost your question in the process.
No, no, yeah, just taking that hour, and giving us a couple nuggets of how you're looking at this stuff and so quickly determining along with your partner, right? So,
Well, I designed because so many financials are poorly done and misrepresentative, and really financials are done by CPAs or accountants for what purpose? Taxes. So they're
mhm.
done on the IR in an IRS format or the state format for the benefit of the state or IRS saying, here's how much you owe in taxes. They're not done or intended to run your business. So over the course of time, I developed what I call an intake form, which is basically a balance sheet. And I will look at their income statement, but most importantly, I'll look at their balance sheet, I'll look at their debt, I'll look at their assets, and I'll see the lowest common denominator. And this is what we always look for in that hour is if this company goes out of business, who's going to get paid? And very specifically, there's in bankruptcy, there's a list of 10 different categories. So you have secured parties first, administrative claims second. That would be bankruptcy attorneys, the trustee, the court expenses, et cetera. Those all come out second. And it goes down the list. Actually, fourth is the Internal Revenue Service. Most people assume they're first. They can get to first, but they don't start out there. They have to lean in order to get into a first position. And so there are things that can be done to to play off of that system and use it to your advantage to determine where your points of leverage are and say to the creditors, for example, okay, if this company goes out of business today, you're down here, you're seventh on the list,
Mhm.
you're going to see 25 cents on the dollar. So here's what we're going to do. We're going to put a repayment plan in place for 50 cents or 60 cents on the dollar, which is over twice what you would get if this company liquidates. So putting them in bankruptcy isn't going to help you. Forcing them to shut down isn't going to help you. This is going to help you, and it will start getting you paid after the first month. The average, the average judgment lawsuit, when won, is only collected 14% of the time. So
Wow.
judgments are not a good way to go if you have an alternative. I suppose if you don't, you want to spend legal fees, go ahead and pursue that. But generally, the banks, as you know, are first secured, or they won't take the deal more than likely. Sometimes they'll take a second position, but most of the time they're in a first position against all assets now owned or hereinafter acquired, and they have a personal guarantee so they can move against the person's home, et cetera, et cetera. So um, by by seeing where those various categories fell in terms of getting repaid, it would kind of dictate to me what the solution was going to look like. In other words, I always wanted to make sure that the last category to not get paid 100 cents on the dollar was going to get more, far more than they would if they forced them out of business or into a bankruptcy. And that's how we would come up with the plan in that hour.
I love it. There's such wisdom and philosophy in there, right? And so cool that I still go back to the partnership that you created was absolutely genius, right? Putting someone in front of the potential opportunity based on the fact that this guy had already created such great value in the marketplace, but you were that engine that fired up young, entrepreneurial person that said, okay, I've got an idea. I've got the solution and I've got a problem in the middle where I need to get met with those people and those business owners. So really, really cool stuff. So let's switch to a little bit of kind of how you've built the brand and the business itself, right? Obviously, it seems like, you know, you do 10 in a day every 2 weeks, that multiplier starts to become a word of mouth. Is that how you built? Was it basically like, hey, man, Scott has this business where I'm failing. I heard my buddy turned around his company. He told me about Scott and this, doctor professor guy that wrote these books. Was that part of it? I don't want to, obviously speak for you, but was that part of your marketing or how did that develop throughout the years?
Yeah, that definitely in the beginning, that was definitely a big part of it. But what I found was getting to the right audience was important.
Mm,
So I would find people who were slow pays, you know, Dun& Bradstreet back in the day. I think they still have something similar, but it was a really good service back then that you could count on the information being accurate, and you could find out they have what's called a paydex score. And depending on that score, you could determine how long it was taking them to pay their payables. And as you know from a banking background, one of the things you're going to look at is accounts receivable, accounts payable. And a lot of times when they're okay, they may be 1 to 1. So you may have a month's worth of accounts payable and a month's worth of accounts receivable outstanding. Um, less less payables and more receivables is obviously stronger. But as soon as they start to flip and go the other way and they end up with more payables, like 1.5 to 1, you start to see that there's a problem. By the time they get to 2 to 1 and they owe 60 days, but they only have 30 days of receivables coming in, you know that they're having a cash flow problem. And cash flow is the lifeblood of any business. I've owned as many businesses as I have. I've not understood what they made when I first went in. I don't know what their widgets are, but I do know what their widgets should cost. And there's a database, for example, that we're licensed in that the IRS compiles that tells us where your direct cost of labor, direct cost of material, and gross profit and subsequent expenses should be for your industry, your size, and your location. And so we can look at that and kind of develop a budget. It definitely has to be tweaked. It's kind of like using AI to send out a letter. You want to read it over and tweak it first. Don't send out what AI gives you. I get those all the time and I go, oh, delete. But if you use that as a tool and apply it, I had numbers in front of me yesterday and I said, this equipment cost isn't right. And my assistant said, yeah, it is. I got it from our resource. I said, no, it isn't. Then they're wrong. She said, how do you know that? I said, it, there's no way material costs are 10%. They should be about 30%. In this case, it should be about $1 million. And you're telling me it's 200 and some odd thousand. And she said, give me a minute. She looked it up and she goes, of course, you're right with numbers. I usually am. I'm not error free, but most of the time because it just calculates. I don't even know how it happens, but it turned out to be 1,020,000. So I was pretty close when I guesstimated about $1 million. So all that information is available to us and we use it as tools. And then we establish a budget for our clients, which most small businesses don't have.
No, no, I agree with that. I mean, it's interesting to kind of, personal and business. Many people run their personal and business without a budget, right? Without understanding kind of where the ins and outs are going. And as very well described, that difference of receivables and payables is so huge. And I think it's because as a small business owner, right? It's hard to get to a million. Only 7 or 8% of companies even get to $1 million of gross revenue. But then when you go million to 5, 5 to 10, 20 to 30 with the companies that we're dealing with, it is very interesting how they operate. And if they don't have internal controls or understanding of where those cash flows, it could easily be lost in, hiring three or four family members that make 150 each, right? And all of a sudden you're spending 450,000 for three people that don't add the value, right? As a quick example, but I love this stuff, and I think it's very.
Excuse me, or sometimes the owner takes out far more than he should be taking out, which I've seen.
Oh yeah, yeah. Well, those are called lifestyle businesses, right? So, so interesting stuff. Well, I will say, I mean, one thing that's intriguing is just the way that you have used your mind and the greatness that you have in it for these numbers to also expand and build, right, such a great community of what you've done with your profit authority. What were some of the things that, as you bring people into your network, right, into your company, how were you teaching them? Because that responds to leadership and the way that you grew, your profit authority.
I have tried to, over the years, I have attempted to automate as much of my thought process as possible so that I do have to be the master strategist. But once I do that, I say, I check off literal boxes and say, here's what we have to do. Here's the order to do that in. And then that explodes for them into tasks that each step could be anywhere from 5 tasks to 30 tasks to accomplish that step. And then they just follow that right down the line. I also tell them when I communicate that, I said, this is task one, this is task one, this is task one. Well, how can we have 3 tasks 1? Because you can do all 3 of them simultaneously. And instead of waiting, which is a 4-letter word in my mind, instead of having to wait for task 1 to get done, they can start task 2 while they're waiting for information to come back from task 1. And so they can do those simultaneously. However, don't you dare move on to number 2 until all of the number 1s are done. So that's kind of a system that I've put in place in order to be able to train, I guess, or do much of the thinking for them up front until they get acclimated to it and they start to say, oh, I know what comes next. Just like a recipe, eventually somebody put the recipe together, but eventually you go, oh, I know how to make pancakes without looking at the recipe. So
Mm-hmm.
that's kind of what I've done to aid in the training. It is still an arduous process. A lot of them, I mean, a lot of them don't even know the terms. They way underestimate what it's going to take to learn this. And I would say that it probably takes the better part of 4 years before I get somebody fully trained where I can just sit back and rely on them and say, go ahead and send that out. I don't need to review it. Yeah.
Wow. It's interesting because I have a gentleman that's been in my chiropractor for a long, long time. I mean, he has a 7-figure business. But it was always interesting to me, he's had a hard time with doctors coming through his practice and that duplicatability, right? How do you duplicate yourself and the knowledge and the wisdom and the hours that you've spent into someone else? And I love the framework that you just said. You kind of make that checklist, that step oriented process. And it's very interesting because that's part of leadership too, right? Is putting them into a successful pattern so that you don't have to be always the master of everything. And it seems like you got that from Dr. I forgot what's that,
Allstate.
Alstein's, right? You got some of that, and then you started to put that framework together. And how cool was it that a few years later he said, "Hey, go on your own. This is you're ready," right? Um, which is a really
Really blessed from coming out of the Marine Corps with my $27 that they paid me, over exaggerating, but not by much. And being able to debt leverage the purchase of a business. I mean, everything in my life in this respect fell into place. But interestingly, I remember saying to Arnie one day, are you telling me that nobody ever asked you to be their mentor?
wow.
And he said, no, you're the only one. I went, you got to be kidding me. I just felt so honored that he was willing to do it. And, he was flattered, but the guy was a great person and just a sharp mind, moved so fast. So ironically, I've looked for somebody to mentor, and I have not found anybody who has the willingness to learn to that degree. So I train people to help me, but the one and here's a hiccup that happened along the line, just for did everything go smoothly for you? No. I started to grow at one point in time, and I was up to about 20 people because we've always been a boutique shop, 3, 4 people, that's it. And I started to grow, and we were up to about 20 people. And I had a gentleman um, who went to work for me, and within 6 months, thought he had it all figured out. And so uh, he he convinced me to replace my computer system with something more powerful, which we did need. Didn't take a lot of convincing. He said, I have a guy who wants to downsize. Give him a couple $1,000s in your system, and you can have his system. And I said, done. So we did that, and we traded, and we got our new system up and running. And shortly after, I went on vacation. A week and a half later, when I came back, this gentleman was gone, and so were all my computers, everything. And in the middle of the floor was my old system. So he had taken my entire list, all my letters that we were using mail at the time, which was very effective. It was mail then was a lot more effective than email now is. So, but he took all of my letters that I had written very carefully to garner attention from the right type of client for us. And he just walked off with it, went down the road, same road I was located on, got an office building, opened up a company with a similar name, and started sending out to my database.
Wow.
So that's when I said, the mistake he made was he hired an attorney who I had used as an attorney, and the attorney called me and I said, you're conflicted out. You really need to get out of there quickly because I'm going to cut him off at the knees. And within a week, he was out of business. But he did enough damage in that period of time that my sales took a dip because they're suddenly getting 2 letters, mine and this guy's, with similar information, similar company name on the same street, and it got confusing. So people just stopped responding to mine as well. And so
Yeah.
I just cut back and I said, I'm not going to educate somebody to become my competition again. That was just a dumb thing to do. And unfortunately, you have people, if he had worked with me, I would have been happy to mentor him, but he decided it was easier to just steal it or attempt to. So, we went through that, but after that, I went back to the boutique style size, and I stayed there for years until, I don't know, sometime back when I decided that I really wanted to scale this up and I wanted to leave a legacy behind that could help small businesses. And so I started building again just not too many years back.
Well, it's interesting, right? I equate it to, and maybe there's um, a connection here, right? I see trucking companies that never become UPS or FedEx, right? And there are many reasons for that, right? But I feel like the dichotomy of being a small business owner with the attributes and competency that you have, and then having an experience like that can really change your mind, right? Can really change the mindset of okay, well, I got hurt pretty bad, and it's painful because someone betrayed you, and took your kindness, and tried to do their own thing, right? So, and that happens in a lot of small businesses, from plumbing to professional services. And I think that's one of the components, you can say, that holds small businesses back, because then the owner says to themselves, well, I can't trust people, so then I'm just going to do everything, and you become the whole business, right? So it's an interesting dynamic, and I appreciate you sharing that, because that's a sensitive topic, it's certainly something that you learn from, but it's also propelled you, right, to safeguard yourself a little bit differently after that episode and give yourself some good tools, in the future. So,
Again, I'm the guy that does the master strategy. And then everything gets fragmented from there. It's like you have these tasks to do, you have these tasks to do. So it would be very difficult at this point to just think you could step in and take over and know everything there is to know, because they get small snippets of the picture. They don't necessarily have the entire picture.
yeah, and that comes from, the 10,000 hours plus, right, that you've been in this arena. Obviously, the base seems like the book that you partnered with the author, right, and doctor there, and then obviously you built out these 10,000 plus hours. So I love it. I think that there's really commonality of how, a small boutique firm, gets out into the marketplace, does something so unique and so different in the way that you shared. So I know you had a couple lists of things that before we end the podcast here that you wanted to reference. Was there anything else that you wanted to share based off of the questions I've asked, or even some of the things that you'd like to share specifically?
I would. And one of them is right in your wheelhouse, and that's people who get into trouble, go to banks, and the bank turns them down. And the common thing you hear, and I'm sure you'll smile at this, is where's the bank when you need them? They want to give you money when you don't need it. And then when you need it, they won't give you money. Right? Well, you know what? Banks aren't in business to take high risks. So there's a level that has to be thought where when the risk gets up to a certain height, the reward is diminishing, and it's like, and you're governed by federal regulations, so you can't just keep increasing the interest rate. So where do they go? They just have to turn the people down. And then the people go down the street thinking the next bank will be dumber than the first banks. And so they go from bank to bank to bank getting turned down. It's a little bit like, you know, a statistic, a common statistic is that 75% of small businesses fail within 15 years. Sorry. And yet, everybody thinks that they're that 25%. And not only that, but they're willing to bet the farm on it. Would you go to Las Vegas and take everything you have the way business owners do? They take their house, they take their kids' education, they take their retirement annuities, they take everything they have and they put it on one number and say, let it ride. you know, and to make matters worse, they keep doing what they've always done, which is the definition of insanity. Why is this going to change? It's the same action that failed before. And yet they won't listen to outside help. It's very, very difficult to get them to grasp what you're saying and say, can you just trust? You use the word, can you just trust me and follow this? I've been through this so many times. Owners of small businesses are generally 80% of them are type A personalities and they have ADHD. And you know what ADHD stands for? Attention deficit. Hey, donuts. I love donuts. So I have to give credit to my niece for that one.
I love it.
Who has ADHD along with me and along with most business owners.
I,
So
I do myself. Yeah, I had the testing earlier this year, and they confirmed it.
You walked out in the middle of the test.
Almost.
So interestingly enough, 80% of your small businesses are started by salespeople or engineers, and they have zero financial knowledge.
Mm-hmm.
And yet they don't go out to get it. They have their system. Their system is their accountant and their bookkeeper. The bookkeeper is usually the same person who answers the phone, gets QuickBooks shoved in front of them and say, here, you now are in charge of QuickBooks. So they miscategorize stuff all the time. It's just unconscionable, the mistakes that you see. The accountant's supposed to catch that, but they don't always catch it. Some of the better ones do,
Yeah.
but Many of the other ones, though, I was giving something by a accounting firm that had two very large offices not too long ago, and it was the balance sheet, and I said, "You're out of balance by $40,000." He goes, "Is that a problem?" I go, "Yeah, it's called a balance sheet for a reason. You want me to fix it?" No, no, that's it. Yes, I want you to fix it. So they fixed it, but that to me, you're responsible to balance it a penny and you're $40,000 off and you don't see a problem with that.
Yeah.
So it's really tough. You have to have good numbers. I'm arguing with an accountant now who doesn't understand what a cash basis versus accrual basis is. And I said, I don't care how you report the taxes, but I have to look at it at an accrual basis. I need to know what my expenses are in this month for my income generated via those expenses to know if I'm making money or not. And if I'm not, now I can drill down and find out why I'm not and where I'm not and make the necessary changes. You do that on a cash basis, you have no idea. The debt can be building up, building up, building up, building up. And it's like, well, I don't have money to pay it. So that's kind of how a cash basis is set up. You'll see the payables growing, but they don't understand that. Most of these people, again, 80% don't understand financial knowledge. And so they rely on the system, which again is designed for tax purposes. It's not designed to run your business. So there's a we now do a before and after as well. So we will show you when you come to me and you show me your income statement, your balance sheet, I will say, here's where you are today. This is what's going on in my mind when you talk about the systems that we've developed. Here's where you are today. This is where you should be. If you were over here where you should be, you would be taking a check home for $250,000 instead of not being able to take a check. And you would have a profit left over of this much, and so forth and so on. So we're able to do a contrast before and after. And guess what? That goes to the bottom line of what's my business worth? Okay, so the minute that we have cash flow in the business and profit in the business is worth a lot more than a business that doesn't have that, which may have a negative value because it has too much debt. So that's one of the things that we're able to do for people now to help them understand what it should look like. And then right now, and I think it's probably because of the baby boomers, of which I am one, because of the baby boomers, they're getting to a retirement age, and they're trapped because they have no successor. Like 65% don't have a successor. They have bad cash flow. They would love to retire, but their retirement is the annuity that they planned on getting from the company, which they don't have now. And they can't sell the company because nobody knows what to do with the company. It's in trouble other than somebody like us. So they're trapped. I can't quit. I don't know what to do. And they're exhausted and they just really want to go to Bora Bora and call it a day. So we've actually just recently, because of that becoming so prevalent today where they are trapped, we're transitioning towards fixing the company, buying the company in its present troubled state, repairing it, creating cash flow, and then reselling it at a discount to the family after it's repaired and staying on as financial support to avoid new trouble. So we're transitioning away from more consulting, I guess, and strategizing to saying, I know my strategy works. I don't want to have to convince these people. It's exhausting. It takes a lot of time. I'm just going to do it myself. And I follow my own strategy, same one I would have given them or that I have given them. And we take over the business, we fix it up, and then we sell it back to them. They can have it back, but now it's making money. We can do it at a discount. We make money, they make money, everybody's happy. And I can move a lot faster alone than if I'm dragging a reluctant owner behind me or trying to make the little old lady, proverbial little old lady, cross the street, only to find out she never wanted to go. So that's kind of what we're leaning towards now, and I'm doing less of hand holding and more of just doing it and giving it back to them when we're done.
So that doing or giving it back to them, when you put them in the right position, are they then going to the bank in that scenario, or are they taking resources that they've had to then pay you out for a certain percentage of that?
Well, yeah, if I get them to a state of financeability, which we do generally very quickly,
Hmm.
then they can go back to the bank. And in fact, if a bank says, we have to turn you down for these 16 reasons, don't go out and borrow expensive money. There's a lot of MCA type of debt, merchant cash advances. These are extraordinarily high interest loans, and it makes no sense. The owner thinks, oh yeah, just give me money, I'll solve my own problems. Oh, well, what did you do with the money you had once upon a time? Oh, you lost that, but now you want mine? Huh, yeah, sure, let me belly up for that. I don't think so. So, but what they're really doing is they're taking debt that they owe maybe to unsecured trade payables, creditors, et cetera, suppliers, trying to find the right word, and saying, I know we owe this to you, but we can't pay it, but we'll go over here and borrow that amount, then we'll pay you, and then we'll pay this amount back over time at a higher interest rate because you weren't paying any interest at all of them. Now you're going to pay an extraordinary interest rate. And to give you an idea, because I've done the math, these MCAs, they don't loan because that would put them under federal regulations. They advance money based on your future receivables, which is like selling your soul to the devil. Tomorrow you'll pay the price. And they do it, they don't even quote an interest rate, they do it at a multiplier. So they say it's a 1.4, 1.5, which means if you borrow $100,000, you have to pay back 140 or $150,000. And they say that's 40% interest. Wait a minute, you just told my client he had to pay that back in 6 months. That's 80% interest. And oh, by the way, you're taking automatic daily ACHs out of his bank account, which annualized, because I've actually done the math on this, actually annualized to 93% interest. And then when you start to pay that and it gets drained out of your bank account, they come back to you when you're half done with the total amount. So I borrowed 100, I'm paying back 140, you're at 70,000. You've done really, really well. We're proud of you. We can give you the same deal. Would you like it again? Well, you're selling cocaine to a cocaine addict at this point. I have to have money. Yes, I want it again. Well, guess what? You don't get 100,000 this time because they have to pay off the interest and the balance owed. So that whole 70 goes out. You get 30 this time, but you have another $40,000 added onto it. So now you're at an effective interest rate of 135%, 1.35. I mean, astounding. You were in trouble before, now you're paying 135% interest. Just think about that. It's incredible. So I am passionate about what I do. I love what I do. It's exciting. I love helping people. And I think the best thing somebody can do if they're in trouble, and I'll kind of, I'm going to leave you with two thoughts, and then I'll aspetta, as they say in Italian. The big companies know the value of outsourcing, what they are not in business for. So they even outsource. I know my wife works for a $6.5 billion a year company, global. She's like the director, she's like the director worldwide of baking. They outsource payroll, human resources, hiring, travel. They're not in business to do that stuff, so they outsource it. Well, you're not in business to do finance. You're in business to make your widget or sell your service. So why are you doing finance? And we now know that your little accounting system really doesn't explain finances. It gets your taxes and your tax return done. So why not outsource that and get some help and hedge your bet in Las Vegas instead of putting it all on one number? At least get some expert advice as to which is the best number, which one comes up more often. The other thing that they should do, and I guide my clients all in doing this, is what we call zero-based budgeting. Accountants study it. Rarely do have I met any accountant who remembers this, or the ones that say, I remember something about that, but I don't quite remember what it was. Zero-based budgeting says, I don't care if you had $10 million in sales yesterday and you only have 5 million because of COVID today. You can have a profitable $5 million company. Now, don't cut back on your expenses, because pretty quickly you're going to be cutting into the bone. And by that, I mean, you take the very structure of your company and say, we don't need customer service, it's an overhead expense. And pretty quickly, the customers who appreciated the service just drop off and their sales go and the sales start coming down. And you create your own problem. And it takes a long time to do those cuts. Instead, do zero-based budgeting. You start with zero and say, I have $5 million worth of sales. Forget the 10 that's gone. I have $5 million worth of sales. What do I absolutely have to have in order to service those sales? And we start building up our expenses. So you take your ledger, your general ledger, and put it down categories, put them down the side so you don't forget any expenses. Forget the numbers that you have. We're going to invent new ones. And at your very first entry of expense, want to guess what I put down there? Profit.
Mm-hmm.
And I put down the industry standard profit, 10% is kind of general. And they will, why are you putting profit down first? That's what you're in business for. It doesn't happen by mistake. It's not what's left over. It's what you start with. And then you build your direct labor, direct material, which gives you your GP, your gross profit. And then you go into selling, general, and administrative expenses, and you forget what you have, add what you need in order to produce that $5 million worth of sales. The people that you need, well, I need this person, I need this gal, and add those people up and what their cost is. And as you're going up in expenses, these are adding up. And if you get to 5 million, your sales level, and you still have expenses, finish it off, and then let's start all over again. It'll take you 2 hours to go through a zero-based budget the first time. The second time, it'll take you a half hour. The third time, it'll take you half an hour. And generally, I've not seen people need more than 3 shots at it before they get their expenses right-sized to the sale. Or they have to start considering, am I just so underselling? Am I underpriced? Should I be selling it for more? I just took over a company last week that hasn't raised their prices in I don't know how long, and their product contains a lot of steel, which has gone up 65%. It's like, how do you not raise prices? You have to. It's justified. People expect it. So, the tariffs had their effect, and I said, just add a line item for a tariff expense so that they know when the tariffs go away, that cost will go away and they won't get charged it anymore. And so you're not arbitrarily adding expenses to them, but you're doing it out of necessity, and it's not generated by you, it's generated by the political environment. So that's it. I'm all out.
No, I love it. I love it. That was a small masterclass right there, right? I think right now, GO4CEO community, if you replay that last 3 to 4 minutes, Scott gives you a genuinely precise way of running your business and taking a look. In my book, the first chapter is assess, because if you don't do that, if you don't assess where you're at, it has to be real for today, not 5 years ago, not, hey, what you could be, right? Pro formas 5 years from now, but today. So assess where you're at and take accountability, right? So it's really, really awesome. I love that stuff. And I feel like there's such wisdom and power in that. So own that part of it, Go4CEO community. So, we usually end our interviews with CEO. So C is for client experience. And if you give us like 60 seconds of what it means to do business with your profit authority, how does that feel like for the client to experience doing business with your business?
I think it means that immediately, not somewhere way down the line, which is what many turnaround companies do. It takes 18 to 36 months. You're going to immediately get a plan. You're going to see physically, here's where we are, here's where we're going to be, so you know what the outcome is going to look like. And it kind of helps you, and you're going to have a step-by-step guidance through that process.
I love it. I like it. So E is for engagement. So Scott, I love the old schoolness of it with the new school thinking, and you're always kind of innovating and being an authority of where you're going. What are some of the ways that you, throughout your career and throughout your, accomplishments, that you've engaged with your, clients, people that, businesses and people that you've taken over, people that you've brought in from scaling to 3 to 20? How do people engage and expect to engage with you? And what are some of the treats that you do that are different than others?
I'm not sure what you mean by engage. Could you?
Yeah, so engage, I'll give you an example like, hey, some leaders love to take their top brass out to dinners, right? Because you break bread with them, you talk about more than just business, talk about their life, their family, their fitness, their faith, all that type of stuff. Engaging could be you do retreats, right? Maybe you take your vendors to a bunch of retreats, or you have a bunch of bankers that you really like doing business with. Do you go to Top Golf or whatever, that type of thing. So that's what I mean by engage.
Okay, so in terms of engaging with the clients, I think none of that typically. I'm about to go out to a client who's been my client for over a year because he's not moving quickly enough, and I have to kick him in the real rear end. But I think one of the things I do is I give them hope, which is the most common thing I hear back. You gave me hope.
Mm.
They suddenly start to realize there are answers beyond what they know. Most people don't know what we know and in the methods that we use. And there are methods. And I developed a lot of this stuff with Dr. Goldstein, and other people just don't have it available. So one of the things that I introduce is humor. And these people are stressed beyond belief.
Mm.
And to to let them vent like a pressure cooker, to let the steam start to come out and say, "Come down, it's not as bad as you think. We've been through this before. I've been through a lot worse before." And they really, and you can just see the shoulders come down and the tension start to drain. And my goal at the end of my first call of an intake is to have them laughing, and then I know that I've kind of done my job, and that's what they should come to expect. Is there are solutions, many solutions. There are so many different creative ways of handling things that it's really important. It's critical. Like, over 40 years, I've gained new methodology and new adaptation and so forth. So, if you go down this road and it turns out to be a dead end, which way do you turn? You get a lot of that. And I said something to somebody the other day, a client, and he said, "But what can you do with these people?" I said, "Well, we'll work on that this way." And they said, "They're Chinese." I went, "Oh, never mind." So I had to back up because the Chinese aren't going to, you're not going to be able to deal with them the same way you could deal with suppliers in the States. So
Mhm.
you just, I think that's the biggest single element. Is I try to introduce and inject humor and give them a feeling that it's not as bad as they think it is, and it generally is not. If it's bad, I'll tell them. That's it. You're right on the border of needing it. I told somebody the other day, if you don't do something within 2 days, and normally I say, take your time, let me know when you're ready. I said, if you don't do something within 2 days, you're dead. And
Yeah.
they were that bad. They were against the edge of the cliff, about to get pushed over. I said, you need to be decisive at this point. So humor is a big element.
I appreciate that type of feedback, right? Because it's a way to lessen the kind of the heightened state that someone's at and bring them back down so that they're open to receive, right? They called you obviously for a reason, but
Right.
there's still this heightened state, and sometimes blockage is, when you're not being able to see things from the forest from the trees, right? And you have an expert like yourself standing with them. You got to lessen those guards, and humor is such an engaging type of scenario. So last one is operational excellence. So we didn't really touch on all the things that have changed over 40 years, but you said like, hey, you wrote things down, you had books, you had meetings and stuff like this, and now we're using tools like Zoom and AI and all that stuff. What are some of the tools that throughout the years now and to this day now you're using as far as just operating, your profit authority and systematizing things, putting them into those charts and like you said, those check mark opportunities. What are the tools that you're using?
Well, there's, I have to think of the words, analytical, predictive analytics, sorry. So we're using predictive analytics. So we know what KPIs are, which are key performance indicators, which banks watch, as you know. And we know where those should be. And we can predict. I think one of the biggest differences between accounting and what we do is accounting tells you what happened yesterday. We can look at this and say, okay, here's where we're going, and here's where we are. And oh, by the way, if you keep doing what you did last month and don't change this, this, and this is going to happen in 2 months from now, and you're going to have a cash flow crunch. And so being able to use tools like predictive analytics, and we're now incorporating AI into that to help us as just as a tool. It's not all AI by any means, because this stuff isn't, because AI can't figure out what to do with personalities. So when you get a creditor who just wants a pound of flesh, that's going to be a lot different from somebody who's very reasonable and understands the situation. So we use tools like that, and then, as I said before, um, we use the before and after, and I've also automated a lot of what I do. For example, we have a very simple report that I built a standard deviation chart on. And so we have your industry standard, and we said if you're one above that, two above that, or three above it, or one below, two, and three below, here's where you are in this category. And then I wrote paragraphs for all of that. So it will say you're here in this category, you're at a two above, and it'll give you a standard paragraph that explains this is where you are. You don't have to really do anything. If you're going to focus, I focus on this. And so I can automatically put together a very inexpensive, a couple $100 report that I don't have to sit there and manually go through and say, okay, where is he? Where is he compared to this? And compared to, it does it all automatically. So those are some of the tools that we're using.
I love it. I love it. Well, Scott, it's been such an enjoyable treat to have you on. Known him, like I said earlier, for a few years, and what a great opportunity to have you, out there in the marketplace, not retiring, thank God, because you are needed, and your wisdom and the way that you go and approach. It's helped me even off camera. I'm going to be thinking more about you and the way that you process things. So I'm excited that this has been a great opportunity. So how do people get a hold of you? What's the best way to kind of inject themselves into your profit authority, ecosystem? Is there the website? Do you give some free knowledge first? How do you want people to connect with you?
Yeah, the website, yourprofitauthority.com. You can go there, you can listen to people who have been through this and shared your experiences. And you can always call the number of our office or my assistant, Carrie, or you can call me directly on my cell phone. I believe that's on there. If not, it's 630-400-8350. and call me directly. And yes, I won't do anything or charge anyone for anything until I have a good idea of what your situation is. So I will do my office will do an intake. So I have basic numbers so I can tell if it's something that I feel we can help you with. And if we get on the next call, I will drill down with you personally and spend 1 to 2 hours at no expense, just so that I can put a plan together for you and say, here's a plan, here's where you are, here's where you're gonna be. And that's going to cost you this much. So before you have to pay any money to us, you're going to have a real good idea of what it's going to yield you. And it's generally more than 90%. So what I like to say is, if I find you're out of money, if I find $10 in your business, can I keep one? That's a pretty fair deal because you got $9 that you didn't even know you had. And that's usually it's that or better. So our costs are usually at 10% of what we can do to help you or less.
I love it. I love it. Well, Go for Show community. By the way, subscribe to the channel if you've not subscribed. Pick up my book, The 4A Formula, Untangle Any Challenge and Think Like a CEO. I mean, Scott's wisdom, my second book, I'm going to have you on it because, I mean, the amount of knowledge was incredible. So super, super thankful and love to have you on again in the future. And Go for Show community, go to your profit authority and get learning. All right. Get doing, get action oriented. So thank you so much, Scott, for coming on.
Thank you. Appreciate it.